Hello, everyone. Welcome to the MakerDAO Unscheduled governance meeting to discuss the recent issues we've had with the PEG. So there's only really one topic on the agenda, which is that one. We've got Cyrus here, who's the ratified risk team, who's going to discuss some of the issues and the possible, well, the response, the planned responses. And then we're going to kind of open it up to discussion and ideas and comments, I guess. Does that feel like enough of an introduction, Cyrus? Do you want to take over?
Yeah, sure. I guess I'm just going to kind of give a brief overview of this situation, just kind of set some context. Maybe throw out like kind of a few of the different options that governance could consider, and then just basically start up a discussion from the community on the direction that they would like to go forward in. Okay, so the DIPEG has been showing a little bit of additional strength the last few days, trading up around 103, briefly up to 104. Last week we saw significant upward pressure due to the introduction of waifu farming, and this pressure was basically there all week, and then over the weekend it unwound a bit, quite drastically, and the peg fell from about 103 down to 1.005. That relief was obviously very short-lived. In the past 3-4 days, we've seen the introduction of new farming opportunities. We've seen compound DAI amounts hit new all-time highs. We've seen a waifu fork. For those that aren't aware, I mean, when I say waifu, I'm referring to the YFI or wifey or yiffy. I'm not entirely sure what the pronunciation is these days, but that's the token I'm referring to. There's been a fork of that project, which has astonishingly already sucked in about 35 million DAI. So it's just starting to become a little bit like whack-a-mole with the different farming opportunities. Over the past several weeks, we've seen a series of debt ceiling increases, each one slightly larger in magnitude than the previous one. So just a few days ago, we had an executive vote that increased debt ceilings by an additional 80 million, and it got swallowed up in basically less than 48 hours. So obviously in the past month or so, this community has discussed a lot about kind of the commitment to the PEG, the commitment to defending the PEG through increases in debt ceilings. I think we may have reached a point where we may want to consider significantly more aggressive debt ceiling increases. One, to lower or minimize the amount of friction being put on governance with essentially a vote every 2 or 3 days. Also just kind of creating as much liquidity as possible, as quickly as possible, given the kind of the general chaos in the crypto markets these days. So certainly one topic of discussion I'd like to get input on is, should we start considering quite large debt ceiling increases for ETH, USDC-A, USDC-B, and wrap Bitcoin? Numbers north of 50 million. And I think that's kind of one of the primary contexts for this call, is that we're reaching numbers that really require some greater levels of community input. Additionally, other agenda items that we could talk about are alternative solutions. Things like adding collateral types such as CDAI or curve tokens, and just any kind of the other range of alternative solutions that have been put out in the chats over the past couple weeks. And I think that about sums it up. And then I would actually suggest that before we dive into the discussion, maybe we can get some questions on just the facts and the context of the situation, so everybody can make sure, so we can make sure we're all on the same page, because obviously this is a very, very complex and esoteric subject. I think it'd be good to make sure that everybody generally understands what's happening with farming, with comp, with waifu, with all that stuff. So if anybody has any questions, this would be a good time.
I think we're already quite familiar with compound and how compound works. Does anyone have information on how much is deposited in, how much dye is actually deposited in these other farming schemes, and what sort of yields people are getting there? Is there a good source for this?
So the pool two, the waifu fork has two pools right now. The first one is just the curve Y pool, so it's not absorbing significant amounts of dye. Pool 2 is a replica of the 98-2 dye pool, and that is sucked in around 35 million dye as of a few moments ago when we checked. And the yields on that one are quite high. They're certainly north of 1,000% APY. That, of course, is dependent on a very illiquid and volatile waifu 2 price. My personal, very, very hypothetical and speculative position is that this is kind of a fork, not unlike other crypto forks that we've seen, which is kind of maybe an initial wave of hype, and then, you know, tends to usually soften up a little bit as attention kind of evaporates. But obviously anything can happen, and I'm not trying to speculate on whether this is temporary or not.
Sorry, random question because I'm kind of unfamiliar. This Wi-Fi 2, are the admin keys in somebody's hands? Like, is it?
Nope,
is it
they were
safe?
burned.
Okay, so it's a safe project in that sense. Okay.
Yep, and one or two Solidity developers I spoke to said that the contracts were identical. Of course, that's very unofficial remark, but generally there's a sense in the community that these contracts, this fork is not some sort of a honey trap scam fork, but that
But to be clear, these contracts, both Wi-Fi and Wi-Fi 2, are unaudited contracts, right? So there might be bugs that we just don't know about.
of course. Yep.
Is it fair to judge based on the amount of dye that's actually sucked into these things, you know, to come to the conclusion that compound is still the most important one for us to think about, because it's got something like 5 times the amount of dye in it? Or does someone believe that that's not the case?
I think what you're saying sounds reasonable, right? It has most of the volume, but I think people will venture out a little bit with their capital on these other projects. So there's always going to be additional demand coming from these other projects.
Yeah, this is something like, well, something I've kind of shared privately. Like, it kind of feels like the genie's out of the bottle in terms of the whole liquidity farming thing. In that people are going to still, like, since it's been so successful, people are going to try to replicate that success, right? I think we just lost Cyrus, by the way, so maybe we just discuss a little bit in the meantime until he reappears.
So again, this is my personal opinion. Like, I guess one concern I have for the maker token holder is, like, are they being compensated for all this additional risk that's being piled on? I know like debt ceilings won't be increased, but I'm just kind of curious, like, what do people feel about that?
Yeah, so I made this argument a couple times. I don't think we should be prioritizing like compensation for collateral risk, because there's a much bigger risk, which is the protocol as a whole, and sort of ensuring that the peg stays at $1. Like, that's the core product, and we should be defending that at all costs and not worrying so much about recouping, 4% or whatever on collateral risk, especially at this stage.
Agreed.
That's a good point.
Anybody else have comments on that topic?
Well, maybe while we're waiting, I would like to promote, I put up a thread encouraging we look at lowering the base rate to do exactly what I was saying, spur on some die growth, like supply growth, and get those stability fees down for USDC-A, and maybe even the Kyber network one as well. We need as much supply as possible.
Can you clarify? So are you suggesting that what would the effective rate for ETH-A be? Would it still be 0 with what you're proposing?
Yeah, I'm proposing we go to a negative base rate, but negative base rate, to be clear, does not imply a negative stability fee. The stability fee has a lower bound of 0% for all collateral types. So going to say negative 4% base rate, ETH-A would still remain at 0%, but USDC-A would go to 0% stability fee as well.
Yeah, I think it's worth just spelling that out every time this is brought up, because I think people will tend to misunderstand.
Yeah, it's a good point.
Yeah, I think we've seen evidence of that, people misunderstanding exactly how that works. So we're going to try and make it more clear in the future.
It's equally with the DSR spread. There's equal confusion, right? Because that also floors the rate at 0. But when you have a positive DSR spread now, it would actually not give you a negative rate.
Was there consensus that we are not interested in raising the BAT debt ceiling?
I don't think there's been anything decided one way or the other, to be honest. Feels like it could still be an open question. It looks like we have Cyrus back now, though. So,
Sorry, the BAT debt ceiling, is that a forum poll or is that like a voting poll to raise that?
It is a poll right now, but I just figured since we're talking about raising all the other debt ceilings, like that could be brought up now as well. I think last I checked, there was like majority of people wanting to raise it on the forum poll.
yeah,
I have
so
a question with regard. Sorry, I interrupted. Go ahead.
Sure. So to say, I think Cyrus, when the meeting started, came in suggesting that I guess the focus of the action today would be ETH-A, USDC-A, USDC-B, and WBTC. That's not to say we do not want to do things with the others potentially as well. I think that was those 4 with the focus.
So
Yeah,
why would it?
Sorry, go
Sorry,
ahead,
what-
Prakash.
Well, yeah. Why wouldn't you just include all of the other collaterals? Well, except mana, because that's a small cap. But I don't know.
Certainly we can. We can if we want. I think we're focusing on significant numbers for kind of the primary, the main collateral types. Adding an extra 2 million to BAT it's just inconsequential, right? If we can kind of get some consensus that it should be included, that's totally fine, right? But we're not discussing adding 50 million to bat, for example. So no, there's no real reason against it other than it's just a little bit easier to reason about ETH and USDC debt ceiling increases.
Yeah, the only argument I can come up with is there are a lot of, whatever token whales out there, and if they're helping to defend the DAI peg, let them in.
I have a question related to the collateralization ratio for USDC. I mean, by increasing the debt ceiling to the numbers that I guess we're even contemplating, the system is taking on USDC risk as a very large portion. Knowing that there are some players, not a huge number of players, wouldn't it also make sense to contemplate lowering the, I guess, collateralization ratio on USDC to something where a few market makers can move and pick a number, it doesn't matter, 1 million DAI, and use a million USDC, lock it up as collateral, but be able to leverage themselves up significantly to go from one position to the other to arc it over. And to me, if we're going to increase the debt ceiling to the numbers we're talking about, there aren't going to be 5,000 market makers that would take advantage of that. There'll be 10, 20, but we should give them as much leverage as possible to do that type of trade.
You don't think 110 is low enough, basically 10x leverage? If 5 market makers come with a couple million each, that could already generate a significant amount, right? Do you think it needs to be more aggressive?
My commentary is more driven that if the debt ceiling is, I don't care if you pick $1 billion for USDC, the question is how do we get to that number, right? And if 5 people, if it really depends on the severity of how critical this issue is, and that's a community question. It's not me saying it is or isn't. It's more of if we lowered it, I don't even know what it is today. Is it 110 or 105? It was 120, I believe.
It's currently 110.
Okay, so if you make it 105, then that's going to make it 20x leverage, right? Or I can't do the math fast enough, whatever it is. The lower we make that number, the fewer market makers we need to have a larger impact.
As soon as you go to lower and lower collateralization ratios, liquidations start to become a huge risk. Right?
But that's the interesting part. For this one collateral type of USDC, the liquidation risk is already a systemic item because it's hard pegged as one. I understand your point totally for every other collateral that has an Oracle feed, but to my understanding, if it's all pegged at one, we're taking the same underlying collateral risk regardless, no?
So that's actually the issue, right? You don't want to forever have that collateral type be locked at one. You don't want to forever have liquidations turned off for something that is such a
100% agreed.
And in order
100%
in order to give us room to turn on liquidations later, you can't have the liquidation ratio be too low.
Unless we have a 0% stability fee, but
yeah, unless you do 0% stability fee, but then that's even more risk for the system, right? Right. That's actually the trade-off, right? So as soon as you go super low collateralization ratio, you literally need to turn stability fees to 0, or you risk not being able to turn on liquidations again.
There is a scenario in the future, however, all I'm commenting is that it depends on the severity, right? And if we find ourselves having to use that as a solution today, we could find ourselves when we come up with other collateral, the market calms down in 2 months, 6 months, whatever the number is, that we just simply lower the debt ceiling back down to the point where it forces the positions to unwind, that no new DAI could be issued out of that USDC collateral type. And or we just launch another USDC collateral type and lower the debt ceiling down to 0 and force it to be retired, organically.
do we have any indication though that the current collateralization ratio is like a bottleneck? Because it seems like the real bottleneck is just the debt ceiling.
We haven't even hit the debt ceiling today. I mean, I guess my point is, let's just humor the scenario. You made it 1.0001. I mean, we're not going to do that, but just some crazy number that would allow for 1 million times leverage. That means anybody on the call here could put up $1 and then lever yourself up 1 million times forget all the transaction fees to cause the peg to break down. It would be the new farming tool that would be out there. The issue is you can't do too much, you can't do too little. It's
a good point, I think, Matt, but let's try and kind of focus the call back on the debt ceiling increases. Like Cyrus is back now, so we should be able to continue where we left off.
Yeah, I mean, I think just the main counterpoint to Matthew's argument is that we just saw like an insta 40 million USDC debt ceiling fill up just from 2 days ago. Like, so Matthew, the drop from 120 to 110 collateralization ratio just happened on Monday. And this DAI supply there was kind of like plateaued at 40 million for last few weeks. And then it just instantly got filled up recently. So I think for now that lowered collateralization ratio is having its desired, its intended effect. So yeah, so moving back to kind of the other collateral types and the debt ceilings. Yeah, I mean, I sort of lost my train of thought from when I got disconnected, but essentially, I think the community is starting to kind of recognize that larger and larger debt ceilings are necessary in the absence of any alternative solutions. Ideas surrounding kind of the demand side essentially got sidebarred for now. Things such as a TRFM, kind of special protocol consideration or special protocol vault types, also temporarily sidebarred. So at least as far as I can tell, kind of the range of available options is quite limited to just increases in debt ceilings. And I think the community is starting to realize that the numbers we need to start considering are significantly higher than we had hoped, or maybe some people kind of view this as a good thing in a roundabout way. But to minimize governance friction and kind of put a more aggressive stance out there, I think we can start discussing significantly larger debt ceilings. So I'd like to kind of hear some input on that, on potential numbers, on the potential tail risks. Obviously this increases an enormous amount of tail risk for MakerDAO. Huge ETH collateral in the system, huge USDC collateral in the system. We're all familiar that ETH creates significant liquidation issues in a market crash. And of course, USDC has some kind of centralization concern there. So definitely would enjoy some discussion on that. My personal opinion is that in some regards, we may have already passed some threshold of conservatism. After which point, if we just kind of keep going, I'm not really sure if I think we need to start thinking about revisiting the operational side of the circuit breakers. Should we need it? We need to kind of start having some sober discussions on the potential tail risks. And, if we've already moved past a certain threshold, then should we just kind of keep driving forward to defend the peg, or start aggressively searching for alternative solutions?
Well, I can say something here. So firstly, to preface this, I'm typically a debt ceiling hawk, I would say. So I'm usually very concerned about increasing the debt ceiling, because if we're not prepared for the collateral risk that we're taking on, it can be a catastrophic existential risk for the system. And I think things like Black Thursday have shown, that even with the amount of DAI that would have to be liquidated back then, which is clearly smaller than how much we'd have to liquidate if that sort of scenario repeated itself today with more DAI outstanding, we could have real problems. But just to make a point actually in favor of increasing debt ceilings right now, what I think is really important for us to look at now and keep looking at is the fact that this DAI demand is, or the situation with having to increase the debt ceiling, does not appear to be coming from speculative bubbles being created in the collateral assets that we're using. So, if we were in a situation where ETH was being really bullish and people were selling a lot of DAI, and we were thinking about increasing the debt ceiling, I think there's a risk there that we're feeling a speculative bubble, and then when this bubble bursts, we'll have cascades of liquidations, and we'll probably take a loss there. We're not in that we don't seem to be in that sort of situation right now. And there's a couple of specific reasons, which is firstly is that, the collateral assets that we're using don't really seem to be in a speculative bubble that's driven by DAI issuance. So this DAI issuance is not actually being used to purchase the collateral assets that we're exposed to. So it doesn't seem like people are actually selling their DAI to buy ETH, for example, or some of our other assets. People are using this DAI to farm, which means that the CDP users are not actually exposed to price risk in the collateral assets. And if their positions were to become risky, it's more likely that they'll be able to avoid liquidation by just simply withdrawing from these farms. Hopefully, nothing gets hacked or nothing breaks like that. That should be liquid, right? And they should be able to prevent liquidation. Unlike a bunch of borrowers who are exposed to the collateral assets who can end up getting liquidated like on Black Thursday. So I just wanted to say that it's worth watching this behavior, and that there's a big difference between what's going on now and kind of a typical speculative bubble. So I think the speculative bubble that we're seeing now is probably in these assets like Comp and Waifu and Waifu2 and so on, which thankfully we're not exposed to, or hopefully we're not exposed to. So if those assets were to fail, we're not on the hook for it. And hopefully, as long as those yield products are liquid, the chances of people getting liquidated are lower than they are in a sort of typical bull market where everyone is borrowing to buy more, right? I don't think that means that there's actually no chance of liquidation, and you can imagine different scenarios where this could go wrong. But it's worth noting that this situation has a kind of special flavor, which I think is a point in favor of increasing debt ceilings beyond where we would usually be comfortable with. So I don't know what people think about that.
Well, so one clarification there is not a speculative bubble for the purposes of levering up on those collateral assets. There's a question to be had here whether, facilitating massive amounts of minting to dump into farming opportunities is not a different kind of bubble, and that's entirely dependent on whether you're going to be able to bank on lasting demand for those farming opportunities and have that remain relatively steady. Because if tomorrow all these farming opportunities went away, then yeah, you would see, massive flood of the supply back onto the market. So that's a question to be had, is whether you think this is a stable continuing trend.
Oh, so I completely agree. And just to clarify my point, I didn't mean to say at all that this is not a speculative bubble and everything is great and this all makes a lot of sense. My point is that it's not a speculative bubble in the collateral assets. So this is increasing our, increasing debt ceiling is not increasing our risk in those collateral assets as much as it would be if we were actually financing a speculative bubble. So I think that the worst case scenarios, these sort of tail risk scenarios that Cyrus was referring to that we should be considering is like, what happens if all of this yield farming stops tomorrow? The good news is that actually would be a supply, a flood of supply, which means that it would be going in the opposite direction to what we're having now. So hopefully we'll be able to unwind it, right? Like in contrast to a speculative bubble in the collateral assets, which would actually create upward pressure, which would be make it even worse. So
yeah, it's a different risk. It's not exacerbating the liquidity crunch, but rather considering what happens in the outcome that you have, an overshoot in the other direction.
Yeah, exactly. So I think we should kind of think about that scenario. Like, what if it all ends tomorrow? How will things do? Like, how will things unwind? What could fail? Another scenario to consider, and this one is quite scary, is like what if one of these like janky yield farming contracts actually traps all the DAI inside of it? So something breaks and basically gets stuck in there, like the parity bug or something. So like what would happen to DAI then, and how would the fact that we've kept increasing the debt ceiling affect our position?
Yeah, I mean, just to put in context, just with the Wi-Fi primary pools ending, that kind of coincided with, obviously, there's potential for multiple explanations, but that coincided with at least a 3-cent price swing on DAI downward. So, if everything else ended tomorrow, who knows how big that swing would be.
Yeah, I think those are good points, both of you. Thank you. Open to hear from someone else. Anyone else have thoughts on us, I guess, increasing the debt ceilings by larger amounts we have previously?
So when we're talking about increasing the debt ceiling by a large amount for, say, Ethereum, do we mean raising it so much that we are subject to the risk, like price volatility risk, where I don't know what we call that risk, but where if Ethereum falls by 30%, then people can just mint free DAI basically and abandon their vaults?
No, this isn't so much the OSM risk as it is just inability to liquidate hundreds of millions of ETH with the current infrastructure that's available. Liquidate successfully, I should say.
Okay.
I was wondering if anyone here, or potentially Vishesh, because he's here, has a view on like this DAI minting that's that's coming from yield farming. Like how precarious does it seem to be? Like are people being responsible? Like what sort of collateral ratios are they using, and like what are the likely risks for them getting liquidated or deleveraged in some way?
So yeah, and I talked about this last week, and I'll touch on it tomorrow as well. But Andrew says nobody's being responsible. I mean, so I wouldn't say it's quite like that, but when we looked at the collateral ratios last week, we were basically seeing an increased amount of debt at the very low collateral ratios. There was also an increased amount of debt at higher collateral ratios, but outpaced by the amount of riskier positions that were being taken. And then the ETH price surged. And that's the thing we always need to keep in mind is we look at collateral ratio. Collateral ratio isn't to some extent priced, on ETH. And if you look at the nominal amount of ETH that was in there, that's actually comparatively pretty risky. So what you got to really be worried about is things stay the same or risk profiles, get riskier, and then ETH price comes back down. That's when you really get screwed. And yeah, there's a potential for very large quantities of DAI to be liquidated in the event that happened. There were like 2 big walls that I remember tweeting about last week, and basically, or earlier this week, and it added up to about 77 million DAI at like I think the price point was about 180 at the time. So obviously that's a moving target, but yeah, in the event that ETH price comes back down a bit, you certainly run the risk of a massive amount of liquidations. Right. Well, Lev has a bounce, but I mean that's an important point to consider. And the other thing that I touched on prior was the amount of debt that's been minted. Like we have to really ask ourselves, anytime something goes up, like what's the likelihood of it coming down, or is it a continuing trend, right? So ETH price is one thing, the other is the debt supply. And so if we look at the debt minted from ETH in particular, that had exploded in the last few weeks. Is that lasting demand, or is that a temporary trend that could come back down, is basically, I think, the most important question. And so there's certainly a risk there.
So I have an open question. I'm kind of curious, Vishesh, have you done any analysis on the types of users? So what I'm kind of curious about is like the ETH people who are minting DAI, are they mostly using it for yield farming, and like compare that to a WBTC minter of DAI? Do you have any kind of sense on that?
I hadn't looked specifically at WBTC, and I haven't looked in depth at, like, because it's a little bit hard to track with all the new stuff going on lately, where that DAI is going. But it's the general sense that for USDC and ETH, a lot of the DAI that's being minted is going into yield farming opportunities. Also by pigeonhole principle, you can look at like the amounts that are minted and the amounts that are being sunk into those platforms. Like, it is very, very likely going from A to B.
Right.
I guess maybe this is a bad thing to ask, but is anybody like, I guess, directly opposed to what Cyrus is proposing, or what's been proposed or discussed so far? Right, so Nick asking whether we can talk about the magnitude of debt ceiling changes.
Sure.
Cyrus?
So the last round that we did on Monday was, I believe, 40 million increase for ETH and 40 million increase for USDC. That lasted less than 48 hours.
The last one was just ETH, I think. The USDC was before that.
Right. The last, yeah. And then, but then the liquidation ratio dropped. The change to liquidation ratio was on Monday, right? And then that's what catalyzed the recent USDC minting.
I think that was Friday, but
That was
yeah,
Friday.
it was recently.
All right. Well, anyways, it's obviously the 40 million is getting taken quite fast. So I mean, every exec vote has been larger than the last. So, you know, now I think the ETH increase should be somewhere in the range of 80 to 100, and then maybe USDC could also be. I'm just maybe another 50 million, kind of that order of magnitude.
I'm not wanting to hear about WBTC and USDC as well. So
Right. I think USDCB could also use an increase for in case of emergency liquidity for keepers. And I think Wrap Bitcoin also got kind of approved on a forum poll to have an increase. So we could kind of pull that forward a little bit and maybe even just increase it and round up to an even 20 million there. Planet X says 100 million total across the board, and we're going to have this meeting again in another 2 days, and that we should double that. That's certainly an interesting viewpoint, and I don't necessarily disagree. So here's the tricky part. Like, if is the community comfortable going that high today without, you know, running it through governance polls and forum polls and just basically saying if the maker holders voted in on executive vote, then that's sufficient from a governance perspective? Or is there some threshold of debt ceilings where we want to take a step back and say, it'll take a few days longer, but we can get some more formal consensus on the magnitude of the increase?
So just to kind of weigh in on the governance things, I would say it's hard to argue with a successful executive vote. Basically impossible. So I guess if it does pass, that's fine. We obviously run the risk of, if the increases are too large and maker holders think they're too large, then they don't vote for it at all, which leaves us in a situation where we are now, right? But worse, because we have had no increases. Going forwards, like, I feel like we should try and aim for something where we can do these changes as part of the regular governance cycle if possible, and don't need to do them as like unscheduled pseudo emergency actions.
I think that's MIP 17 is supposed to do that.
Yeah, that's fair. Unfortunately, and I mean, unless we kind of break the MIP cycle, then that's probably not coming for another month or so.
Well, how do we feel about the kind of the overhead on voting for governance? Because one thing we could do is do kind of the normal, do an 80 to 100 million increase, but then if it gets hit, we can just put up another executive vote immediately without having to resort to another expedited governance call and polls and whatnot. And so basically break it up into chunks, but then we would just have to do an additional executive vote. So that's kind of in line with kind of previous emergency cycles that we've had in the past year, where we basically we allowed governors to kind of keep putting up expedited executives, and we don't have to do some extraordinary increase all in one go.
Yeah, I mean, as you said, we have done that previously, even like in kind of the last few weeks, right? I think that's probably fine. Like if the first like large increase kind of passes, then that's kind of like tacit approval that that approach is like valid, right? Like if the large changes pass in the executive, then that's reason to believe that makeholders support taking large changes in the future.
Right. And we can even do increasingly larger ones. So if we put out the numbers I just suggested or something around there, and if it gets swallowed up immediately, then we can just do an even progressively larger chunks.
Yeah, it sounds almost like we kind of need to figure out like a policy, right, going forwards that could ideally go through like the regular governance, like the weekly governance cycle. So do we maybe want to kind of try to vote on something that's a little bit like what is kind of one step removed from like direct changes, right? Like, do we want to sort of vote on whether we want to do like, like changes that double each time that we have to do it, right? If a certain threshold passes, or do we want to sort of say that we would like to do larger changes on the order of like, like 50 to 100 million, or alternatively doing what we've been doing so far and upping it by a small amount each week. Like I feel like I'd be more comfortable if we had like some kind of guidance as to which approach makeholders would like to take in general, and then we can kind of use that to justify executives that do that, sort of follow that general plan, right?
Yeah, I that makes sense to me, but I just think it's going to be too early to even come up with various strategies, because it could all change in the next few days, right? So the strategy that might be valid today just is no longer applicable starting next week, and by the time we get governance polls going. So I would prefer if we could just maintain a little bit more nimble. So okay, so then how about we kind of do a good chunk today in the executive, and then we'll just reevaluate, and if based on how quickly it gets taken up, and obviously we're all monitoring this very closely, so shouldn't be too difficult. I think in a lot of ways the purpose of this call was to just sync up really, and kind of get the community on the same page for what's happening. But I don't actually think there's much divergence of opinion on the actual proposed methodology and the level of debt ceiling increases and the pace at which they need to happen.
Yeah, I think that's true. I mean, it's always important to remember that this was an emergency call with like an hour lead time, so this group isn't necessarily representative of the wider community. But yeah, I think in general, like I agree. And I think kind of talking about like the sort of being nimble thing, I think meetings like this are kind of more necessary when we are sort of doing something which is a change in strategy, right? Like we're kind of proposing that we change the strategy of kind of consistent sort of 20 mil increases to something like larger, right? So if the situation changes to the point where that strategy is no longer valid, then maybe we either do it on one of these calls, or as part of like the regular risk call, we kind of discuss how the changing conditions have should change the strategy, right? So T-Bone's asking potentially using percentage changes rather than specific amounts, as that would scale as the DCs grow.
Certainly possible. I tend to think we don't really need to overcomplicate that type of thing right now, but conceptually it's the same is what I suggested for sure.
Great. I guess, Cyrus, unless you have any other sort of points you want to raise, I'm going to kind of propose that we sort of end it here or soon.
No, and we can definitely continue discussing this just tomorrow on the regular governance.
Yeah, exactly. Yeah, it will for sure be a topic. Does anybody else have any like sort of final questions or points they want to make for posterity or for Cyrus or for whatever? Okay. Andrew said he hopes we're being careful in the chat, which is, I mean, I think we're a little bit past careful at this point, but yeah, I think we're being as careful as we can be. All right, so any last words before we end? Anyone? Sounds like no. All right, thank you everyone for coming. I know it was short notice, so doubly appreciated. And I will hopefully see most of you tomorrow. Thank you.